Welcome back. Well, it is a down day for a couple of stocks which are in focus, and one such stock is Wipro, which is down around 2 to 3 odd percent. It signed a deal to acquire global tech company Capco for $1.45 billion. It is the biggest acquisition by the company so far. To talk more about it, we have Aniket Pandey of Prabhudas Leeladhar, who joins in with his view. Aniket, hi. Thank you very much for taking the time out. If you could just start by, the big risk which a lot of analysts are talking about, the fact that the acquisition is very big and there could be integration issues which could be faced by Wipro. What's your thought?
Yeah. Thank you, Ekta, for having me. No doubt, Wipro's new CEO is taking right step towards the transformation journey. However, we believe the integration benefits may take further time to showcase. So basically, historically also we have seen that Indian IT services have a very limited success story in creating a consulting business organically also, and also organically. So we have very less evidence of Indian IT having success stories in consulting business. Okay, we can take example of Infy's acquisition of Lodestone, which was done in 2012. Initially, they did well, but slowly the performance started to wither away. Secondly, consultants are very heavy cost asset, and to retain them is very difficult. Consulting business is extremely client-centric business, and if a consultant goes, the revenue from that respective clients also withers away.
All right, Aniket, so you're saying just going by what happened in 2012 when Infosys went ahead and they acquired Lodestone, which was also a consultancy company. History is not on Wipro's side. I think that's the short point that they're trying to make. But, in hindsight, what do you think? Wipro should not have ideally made this acquisition?
I think, as of now, Nigel, Wipro's organic business is on fire. Okay, they are going after deals very aggressively, and also they are gaining market share. We have seen increased deal pipeline in last 2 to 3 quarters. They are doing good. They are doing extremely well on revenue and margins also. Okay, so presently, right now, there are many major transformational exercises which are happening in Wipro right now, which are on personal level, and also on organization structure. Many changes are happening. Okay, so I think the company has its hand full with this initiatives as of now. So we believe that a big bet like this could have been avoided, especially when the demand environment for Indian IT industry is extremely strong.
Okay. So overall, the strategy, Aniket, has been that there's going to be a bolder Wipro which is going to come forward. This, in fact, is the 4th acquisition that they've done since July 2020. When you talk to the management or you interact with them, are you going to tell them to stop and probably not undertake any sort of inorganic activities, and probably focus on integration, organic growth, and then probably revisit it later? Or are you okay with this new, bolder initiative that they're taking on?
See, even if you look at the valuations on what this acquisition has been done, so basically this acquisition is very expensive. They have paid around 17.3 trailing X EBITDA, which is almost 2x EV by sales. Okay. Secondly, I would also like to highlight Fidelity National Information Services have sold around 60% of their stake in Capco to Clayton, WR and Rice in 2017. Okay, and basically that deal was happened at only around 800 million. It means that Wipro had paid around 70 to 75% higher than previous transaction, which has happened in 2017. Okay, so going forward for Wipro, I believe that they should stick their more presence in what organic business they are doing actually.
Okay, final question then. You've already reduced your multiple from 21 times to around 20 times, which is not cheap. It could be a bit of a discount to the other big names. But further derating in terms of multiple, is it possible, or it's fair to give them around 20 times?
I think, see, Nigel, going forward, I think there would be many factors which would weigh on valuation. The first thing is that Capco scale is huge and has a very diversified presence. Okay, so there would be a integration challenge on it. Secondly, there is new CEO in wipro, which also means that there is new sales structure, there is new organized structure.
Yes.
And thirdly, I mean, historically, investors are very skeptical when it comes to large M&A in Indian IT services space. So I believe going forward, these all things are going to weigh on valuation. I think as of now, 20x is fine for them.
Okay, thanks so much, Aniket, for joining in. The broad summary is that history